Alrighty, so hopefully you can hear me. Alright, I'm gonna on F11 this just so we can switch. So I look at both ES and NQ. I mainly look at ES for like the reversal points and stuff like that, whereas I look at NQ to actually trade, because if you look at like 1 minute NQ or 15-second NQ, you can kind of see how shitty and choppy the price is. You can see the candles are kind of weird looking, whereas NQ on a 15-second, we can see how pretty price is. Like pull back, come here, zone, tap, pull back, come here, zone, tap, and you can kind of see like a lot better. Boom, zone here, taps into right there, and then we fall off, zone, tap right here. 15-second is basically the most ideal for me to trade. We'll just go over that really quick. But for kind of overall direction, I've noticed ES is what really moves the market, meaning we might not be in a POI on NQ, like you can see on, this is last week. So last week, before market open, I was looking to go short off of, I don't really look at any other time frames for the most part, but I was looking to go short on NQ. It just happened to be that there was a zone here, and there also happened to be a zone here on the ES. Last take profit was in this area. You're like, okay, why would we take profit there? You go on the hourly on ES. There's an unmitigated zone right here if we see the imbalance there. I don't really use these for reversals and shit like this, but you can see it did really well. And we take a look at that same exact area on ES, or on NQ. That area doesn't even exist. So we see this weird thing where we tap into some sort of zone, and there's not really an imbalance here or any type of zone. If we go on like maybe the 4 hour or something like that, we can see something like that. Yeah, we can see a 4 hour. But to make a precise like actual area, I look at ES for kind of the overall direction. And yeah, it works pretty well. Almost every time ES moves, NQ follows. I don't really look at SMT. I don't find a need for it. All I really look at is kind of the higher time frame candle closures and stuff like that. Like a good example of that would be, we check ES, or we're looking on the hourly, we look at this POI, we see the fact that the 1 hour tapped into this, and we close this hourly candle in the middle of the session pretty bullish, meaning we open the candle here, we drop all the way down here, and then we close, meaning we're rejecting this on some time frame. So the minute I see ES close on the hourly like this, the candle, I'm looking to go long at the same time on NQ instead. So I put pretty good emphasis on the higher time frame candle closures, because I mean, if you saw this candle close super fucking aggressive inside the zone, then you can kind of expect it to not work. And so I don't use the 2 hour or anything like that, but I'm giving you another example. Is, remember, we have this 30-minute zone. This is the 2 hour candle closure. Obviously, if you want to look at the one candle on the 2 hour, you can, but I can see the fact that I know this is going to be like a really good rejection. I can look at that and just kind of see that rejection on the 30-minute. See super big impulse, tapped into this right here, a little bit of rejection. The next candle is a full body in the opposite direction. And so immediately after this, I'm expecting to go short for the primarily most of the day. The only time I expect to go off reversal is somewhere either in here or somewhere in here. But by the time we reach this area, the amount of shorts that we could have taken have been pretty good. And then so we look here, we go long. You can go on the 1 hour if you want. You see the doji, same exact thing as the 1 hour here. Rejection. And literally, it's pretty fucking fair game to just follow 1 minute zones all the way up. I don't really look at structure too heavy. Like, I mean, I don't visually see, okay, push up, come back, push up, come back, okay, that's a break or not a break. I look at kind of what's holding and what's not. And so I remember taking this trade on NQ, looking long, because we tapped in. We saw, this is kind of the way I look at it. We look at this zone right here, it's a sell zone. I'll just mark it in red, and then we see this buy zone. Higher time frame says we're in a long POI, meaning the higher time frame says we're going to go bullish, right? So if you had to basically guess what side or what zone is going to hold in this situation, we're between this sell zone right here and this buy zone, and they're kind of just ping-ponging back and forth until eventually one gets ran, right? So if we're going to have to decide whether if we want to go long or short here, I will either take the long because we're in a higher time frame bullish POI, or kind of wait and see what happens. And so another example is this. We see this buy zone hold and then push through this zone. Again, we see a little rejection right here. We see this buy zone, or not a buy zone. We see the sell zone get like absolutely washed. And so right now in my head, I'm like, we're bullish off of here. We respected this, took out this zone in a higher time frame POI. And so everything is pretty much setting up bullishly. And so my long would be take a long here. First target would be this bearish zone, because we could reverse off of this. Obviously a higher time frame says it's pretty unlikely, but we might get a little rejection like this, and I'd rather just kind of get out beforehand, because if you keep in mind, I'm taking 1 minute zones, 2 minute zones max. And so we take a look at what happens. We tap into the 4 minute zone. The reason I chose a 4 minute zone is because we kind of just take a look at it, like it looks decently beautiful. Take a look at the 5 minute. We could use the 5 minute. It does exist right there, but the 4 minute is the black candle, and I tend to take these over. I'd rather miss the trade than take something like that. But yeah, there's no guarantee that this is gonna hold, but I'm expecting at least some sort of rejection. Like we definitely could have gone down into here, tap into the sell zone here, and then continue lower. But by the time that happens, I'm either at TP1 or I'm already out, because I'm taking like 15 second or less confirm on this. And so like an example is, you look at the 15 second, we're in the 4 minute zone or whatever. This is my thought process. This is kind of Perry's idea as well. So we're in the zone here. I didn't take this exact trade. I took the 1 minute later, but we see we have a bearish zone here, putting in bearish structure, bullish zone here, keeps getting ran. So let's just clear all this stuff up really quick. I see that there's a buy zone here, ran. And we see that sellers are holding in, or sell zone holding, blew through the buy zone. Sellers are in control. Another sell zone here, but I didn't see the follow through after we tapped into the buy zone. Meaning we're right now expecting sellers here, push up, come back, rejection. Sellers here, push up, come back, rejection. Sellers here, you get the rejection, but we don't get the follow through beneath this low. Meaning we're kind of creating like this double bottom kind of thing, not to sound too retail, but we're like this, push in, and then we're creating this, and we're hesitating here, right? And so normally with trending markets, it's this, tap in, whatever. Sometimes we get a double top, and then we go down even lower. But most of the time it's just this down, come back in the zone, down, come back into the zone, down, come back into the zone. And so I match the idea of the higher time frame, 1 hour, or whatever you'd like to call it, the 4 minute, which looks super fucking clean. And then I look at the 15 second or the 10 second or the 5 second, whatever is really applicable in the certain situation. And so we see this follow through of buyers or sellers unable to take it beneath this low right here, like they were able to do here in this situation. This zone got ran. This situation, this zone got ran. And basically we're kind of seeing the hesitation as we tap into the 4 minute zone, which is perfectly lining up with our higher time frame thesis, 4 minute, 5 minute, and then even the 15 second. And so we tap into the zone, and the way the Perry entry works is, the one he made up is, we basically expect, if this doesn't hold like this, the idea is if we were to trade back into this zone, it's really unlikely that it's going to hold. Meaning I don't expect it to go push down, come back, push down, come back, and then continue lower. That rarely fucking happens, especially in a higher time frame POI. So the idea is, if we do push up again the second time, I'm going to take a long, fading this sell zone. Meaning if we're seeing this right, and this is the current situation, we'll look right here. We'll go right here. if we see this candle right now, the idea is if this holds to go beneath this low, I'm going to just sit on my hands and wait. But if we trade one tick higher than the tap in, the first initial tap, meaning if we get above this high that already tapped into the zone, my expectation is we're not going to hold the sell zone. And we're basically fading the long right here. And then we play price. This would be our entry, candle underneath the, stop underneath the low, expecting the fade to continue. All right, this zone may not have got tapped into on this second, but like if you go on the 30-second, I'm sure whatever, there's the zone right there, did get tapped into. So I expect this to be fully mitigated, but just in case that it's not fully mitigated and it's actually, this is just like inducement, this is just inducement right here, it's going to tap into here and then continue through this. Before this zone, I break even. And so worst case that happens, we tap break even, I get a re-entry if it does hold. And so this zone gets absolutely slashed, and then we kind of just target, we follow the targets. The targets are basically areas of reversal, meaning here, area of reversal. We follow this zone is technically mitigated right there. This zone is mitigated. And so after this, we look to the left. The only other area roughly is like up here. And so you can basically confidently long all the way up into here, first partial or whatever the hell you want to do. We see there's a little bit of hesitation, and then the next area is this roughly. And so we get the hesitation right here, expecting maybe it pulls back down here or whatever. But I'm not in it for the majority of the move, and that's just kind of is what it is because of the way Apex works and all that stuff. So it's a good, easy 3R, pretty confident. This is a very like textbook setup if I were to really get into it. So going off the bearishness from the morning, we see that we're in a very decent looking 1 hour zone. We can expect bearishness from the market open, and we could expect bearishness all the way up until this zone, and it's pretty confident, at least for this day's direction. I can kind of expect we're going to go bearish. If there is any hesitation, we're either going to hesitate here, pull back a little bit and continue through it, or we're going to totally make a reversal, which we did. And either way, it doesn't matter because this is the hourly. I'm taking 1 minute zones, 5 second, 10 second, 15 second confirmations. And so we see ES taps to this before market open. We see NQ tapping into the same sort of zone. And so now it's pretty obvious. If you didn't take this market open trade, that kind of sucks. It is what it is, but I'm going to go over it. I didn't take this whole trade. It was kind of just back tested. And let me kind of go over this stuff with you. So let's go on let's bar replay this, like let's go on the 15 second, and I can kind of get through, kind of explain what was exactly going on here. Alrighty, so same sort of thing. Multi-time frame analysis is kind of key. So buy zone, tap in, or respecting this, sweep or whatever the fuck you want to call it. Same exact idea. We tap into the buy zone, failure to continue up here, and we go on the 10 second. What's basically happening? Sweep, you can call it whatever the fuck you want. I'm not taking entries based on this. But the idea is, again, we're in this zone. This is the last buy zone. And what's the idea is, if we get back, maybe I go on the 5 second, maybe it'll be a little bit better to explain. Yeah. So here's the 5 second zone. We tap into the buy 5 second zone. I'm not taking a trade here, but my expectation is to go short off of this. That's just the higher time frame idea in my mind. Okay, just so you can understand. Or bullish respect, bullish respect, bullish respect, kind of. Fat wick, whatever you want to call it, sweep. To me, this doesn't matter. I don't give a shit what you call it. Rejection. If it couldn't close above and close right here, that's cool. If it wicks up here, that's cool. I consider this a failure regardless. And so Perry's idea is, if we were able to, where we failed to continue and displace higher, if we come back into this zone, this makes this zone extremely weak because of two things. One, we shouldn't tap into a zone twice. This isn't support and resistance and shit like that. It usually does not happen where you tap in, push up, fail, sweep, come back, respect, and then go long. Like that rarely happens. Plus we have the higher time frame bias, 15 minute that says short, and the 1 minute that we see right here. And so first tap in, come back. On our second tap, we could take two different things in this example. One would be the obvious break of the zone, come back into here, take it immediately, entry here, stop loss up here. The second one would be the second tap inside this zone. You can either take the trade like this, where you put your stop loss all the way up here, which does have a wider stop loss because you would have placed it one tick underneath the candle that tapped originally. You would have been tapped in right there, which is fine. Or you could just take, if you see it tapped in a second time, take it a tick underneath this low. So your stop loss, instead of being all the way at the top, you get the little pullback. Your entry would have been right here on this black candle that took it, and then your entry would have been like that. A tick or two for spread. And literally that's it. Targets, obviously, go for first TP. Usually I like to aim for 2R. First area of whatever, second area of like whatever, it's like somewhere in here. I guess this would be like what, probably 15-second, 30-second zone. And then we get the fall on the face of the fucking earth. And then we get the morning move. That's an easy 2R. Makes sense. It's pretty quick, but it is what it is. Last, if you missed that shit, there's a fucking another obvious zone. See, we push in, sewer is displacing bullishly, second candle is bearish. Shows some sort of rejection, meaning this is a good zone. I don't know if there was an entry here. We check the 15-second, exact same idea. We go bullish. Where do we go bullish from? This zone right here. Tap in. What do we expect on the second tap? Failure to continue up here. We tap in here. Failure to push through like we're holding bullish structure in a higher time frame bearish zone. We could refine this. I don't need to refine it. It's not really helpful. Personally, I don't take zones straight up like this. I like to confirm them. We go on 10-second, maybe it'll give us a little bit more information. Maybe not. And so we see what's happening here. We're tapping into this zone, and then we make another bullish zone here. On the tap, we pretty much just melt right through it, and you can take your entry on the, see, this candle actually does tap right here. I know it doesn't look like it does, but it does right there. First tap, second tap, you can take your entry to go short like this, or you can wait for the second tap of this zone completely and take a bigger stop loss zone like this, something like this, that high, or just something like that, expecting just to run lower. Yeah, that's pretty much the entry. The reason why this works extremely well is because NQ likes to not respect zones, and by respect zones I mean come back to them. Meaning, if you're sitting up here, like in Forex, I remember you always used to wait for the inducement, the higher zone. In NQ and ES, I found that when it moves, it moves. Meaning, I will take every fucking entry possible. If you missed that, there you go. You get another fucking entry right here. Valid. Tap in, most likely a break even, because I go break even rather quickly. But if you don't, then easy entry. These are fucking amazing entries if you ask me. But if you wanted to take it from the 15-second, you surely can. Just know that you're expecting this boom, tap in, failure to continue higher. It just doesn't continue higher for whatever reason. And then on this movement right here, you can expect that when we trade a tick lower than this candle right here, we're going to expect to go way lower. First, the break even would be around this zone, in case that we do get a big pullback. We tap into this zone right here, like it's inducement or whatever the fuck you want to call it, and do something like that. And then we can look to re-enter at this zone. But again, if you remember what I'm saying, it doesn't like to usually come back. So in times that it does come back all the way to the top zone, it's kind of a little sus if you ask me. But tap into here, complete reversal, higher time frame idea is met, higher time frame everything is met, and it's honestly just perfect. Tap in, boom, second tap, expecting it to get ran, higher time frame says bearish, medium time frame says bearish, 15-second, then shows bearish. And then we basically catch the whole entire short for the day, as well as there's also valid longs for the day if we want to get into that. I don't remember exactly where, but again, you could have taken this 1 minute, we tapped into the higher time frame. Yeah, expect kind of what I'm seeing as bearish zone right here after tapping in the higher time frame, doesn't get respected. Buy zone does get respected. Good. Next buy zone does get respected. Don't think there was an entry here if I do remember. Yeah, there's no entry really at the bottom of the first initial tap, but there was an entry if you take a look at this. Same exact concept, sell zone. The second tap, we could take this long right here. Stop loss right here. Expecting this to not hold on the second tap because we're holding the higher time frame objective, which is now the ES 1 hour that we were talking about earlier. And if you aren't comfortable taking that buy stop, then you can take the zone right here. Taps to the tick, cover either the bottom of the zone right there or the bottom of the whatever the fuck. If you didn't get into that entry, then there's another entry, the extreme area here. I stay away from this stuff here. My goal is to not get into trades here, but I like to see consolidation because it usually means a fat move. You usually get the whatever, mark up, sideways, you know, ICT, SMC, YCOF, whatever you want to call it. Yeah, pretty confident. Go to break even 1 to 1 usually, 1 to 1.5. It kind of depends on structure and stuff like that. But anyways, this is the trading strategy. That's the parry entry. You can pair it with the normal break retest of the zone, but ultimately it's pretty fucking gas. I'm not gonna lie. And there's at least 2 or 3 opportunities a day on this. And that's only trading New York from 6:30 to like 9:30 or 10:30. You saw some at the open. You saw some at the middle of the day. You saw some at the end of the day. Like it's pretty much there for the taking at least. And realistically, if you have the higher time frame objective all like going well, then that's perfect. And you can see how well NQ respects these kind of zones. Like obviously this is hindsight, but boom, tap, that's at least a 3R. Not saying to take these, boom, tap, that's at least another 10R, whatever the fuck. And let's say we're going to short in here. Worst case, we take the short here, boom, 3R. We take a short here, that's a loss. Take a short here, boom, great. Like there's just so many opportunities. It's unbelievable. But biggest thing is you don't really need to worry about spread because the spread is literally this size right here. That's how big spread is. So if I market entry, that's how big spread is. Sometimes it gets to 0.5, which is really rare, which is that. Oh boy, half a candle. It's so much better than Forex, bro. There's no slippage at all. But it's basically free money in my opinion. I could pretty much teach this to anybody. Follow where it tapped, the refinement right here. Boom, zone, candle, run. Oof, good. It just works like clockwork. Hope you watched the whole thing, bro. It's pretty fucking good material. I would assume people would pay for this. If you ask me, like, I wish took me a lot of years to figure all this shit out, right? Took you too. So I'm sure people would pay for this shit.